Let me tell you something, player. I've spent my entire career being a believer in capitalism, American exceptionalism, business being the solution to most problems, ingenuity, science. I was never in doubt that we would have a reopening, but I don't have any medical training to be able to say, like, oh, it's going to be the summer of 21, right? Like, I couldn't have told you that last year. What do I could have told you. You would have said, well, who the hell are you, right? But so I invested as though there would be a tomorrow. I have no choice. I have an 11-year-old and a 14-year-old. I have to believe that there's a future. So look, I bought Simon Properties. They told me it was going bankrupt. All right, I'll take that risk that it's not. I think I bought that in the 60s. I'm added to Shaq. The stock's up 200-something%. So I always was investing, and even recently, bought Live Nation for the first time, added to it a week later, added to Uber as an average up. I'm up substantially in Uber. I'm buying on the way up. I'm hot right now. I'm like Nick Jonas. I'm nice with all the reopened stocks. And then my tech names, I didn't throw them out just because we're going to reopen. So I wasn't like, oh, let me get rid of Zoom. Let me get rid of Alphabet and Amazon because we're reopening. That's not the way I'm in this thing. So I'm long. I own stocks right now, relatively recent purchases that I think have the most to benefit from the reopen of the economy. And I think this summer we're going to go off. Like, I think people are going to be going nuts in the cities this summer. We're approaching, maybe not herd immunity, but at least among young people, we're approaching this area where almost everybody has the disease or is vaccinated. And I think these stocks have a lot of upside left, and I want to be in them for when that happens. And I'm not saying that they're all cheap. I know they've gone up a lot. I don't think that people are bullish enough about what the second half of 21. Stephanie made a really great point, and I'll add to that. M2 money supply is up 26% year over year. That comes from Brian Westbury at First Trust. Think about that. The average since the 1970s growth of M2 money supply, that's money in circulation, not money sitting like a dead body on a bank balance sheet. The average is 6% a year. I just told you it's 26% a year. There's too much money all over the place. And when Stephanie says that consumer spending is coming down the pike, I think she's dead right. And I think that money will be spent back on travel, experiences, leisure. I want to be in those names.